All right, guys, what is going on? What is good? What is good? Hope you guys are ready for Wall Street Wednesday. Hopefully you're ready for another episode of I Told You So. We kind of do a lot of that around here, don't we? We do a lot of that, don't we, chat? Okay. The volume, yeah, volume should be good. Volume should be good. Know what I'm saying? What a wild day. What a fun day. Where to even begin, bro? I don't know. I guess we'll start off on gold and then we'll move over to the indices. You guys good with that? Drop some ones in the chat if you guys are ready for that. So Brian posted in the chat earlier, a couple hours ago, said he took a trade on gold based on the lazy traders model. So I went and took a look at it. I liked it. I thought it was pretty solid. So what did we discuss yesterday? What was the discussion yesterday as it relates to the lazy traders model? What did I tell you about it? What was it about? There additionally was there was two tweets from last night that I want to reshare with you here. All right, let me do the intro and then we'll get into it. What's good? Willow, Tang, Kieran, Naruto, Mason, Torty, Jorks. And yeah, Naruto, we're getting some throwback music today. Christian was good, man. MJ 2020, Fernando, Edmundo, Rich off the dip. Oh yeah, I tweeted a lot today. I did some follow-ups, right? I think I forgot the kid's name. Pray for his dumb ass. Brandon. We'll talk about that in a bit. Pray for Brandon. And anyone else who was bearish this year. Okay. Salmon Brandon. What a fucking... Oh my god, I killed myself. All right. Let's come back. So I tweeted twice yesterday. One of them, I've taught you how to win with precision and even perfection, though not required. I've taught you how to win being lazy and stupid simple. I have provided you with options to fit whatever mold you want when most educators try to mold you to their own personal style. Then, like within the same few minutes or so, because it both says 20 hours ago. But the second one, I said price delivery has nothing to do with any sort of science or pseudoscience. No astrology, no frequency, no vibes, no moon phases, no weather patterns, no energy, no vibrations, none of that silly shit. Time, price, and context. Speaking of which, I don't know why that's not on here. There we go. I knew something was off. That's what it was. Watermark was gone. Okay. So what did we go over, chat? One of you has to know. There's 36 of you on here. Someone has to know. What did we talk about yesterday as it relates to the lazy traders model? Starting to put the pieces together. I get it now. Get what? What are we talking about? Come on, one of y'all has to know. What did we talk about yesterday? As it relates to the lazy traders model. Come on. I'll give you a minute or two. One of you has to know. At least there's 36 of you. At least one has to know. Somebody. All right, Cameron says, doesn't really matter where you enter. I mean, it matters, but not as much as most people think. But I like the answer. Doesn't really matter where you enter as long as you're on side with price delivery. Okay. What else? What is staring at you right in the face? What is staring at you right in the face, chat? Thank you, Naruto. Finally. It's like pulling teeth over here, man. You can enter at 25 with a stop at the low, 50 with a stop at 25, or 75 with a stop at 50 after price pushes above a lower high from sell side. Okay, I'm not sure about that last part, but that's what I was looking for. You can enter at 25, stop at the low. You can enter at 50, stop at 25. You can enter at 75, stop at 50. And guess what? You would have absolutely made gold today your bitch. And that's why these are on here. I taught you this yesterday. Yesterday. I taught you this. Today, it was available on gold. Pyramid. You can add to a winning trade. Come on. Come on, man. I know a lot of people, they may not get this. They may not trust it. They may not understand it. They may not want to understand it. But just like I said on my story today, and I know I might come off a little bit like an asshole today, but the point is, you are not limited. I'm not fucking limited. I'm not limited to a specific concept. You can only trade imbalances. You can only trade inversions. You can only trade below 50%. You can only trade below, let's say, New York Open, or below London Open if you're long, or above if you're short. I'm not limited to that. Okay? And by now, you know me and how I feel about ceilings anyway. Okay? We don't have ceilings. The only ceilings that you probably have are mental ceilings that you put on yourself. We've talked about that already recently. Getting rid of, identifying and eliminating self-limiting beliefs, right? So I'm not going to be limited to just this or that. And I've taught you the same things, right? You want to do another I fucking told you so? How about this? There's no perfection in trading, right? People keep saying that. There's no perfection in trading. Okay. Okay. Clearly, they don't watch my fucking channel, because watch this. What's this right here? Low? High? Lower low? Revolutionary, right? Such a revolutionary idea, right? That was utilized a little bit to go lower. It wasn't really bearish, okay? Short-term low swept. Now we're trading higher. Okay? We trade through it here. Can you guys see that? Now watch this. Don't miss this. Because remember, there's no such thing as perfection. Right? That's what they'll tell you. So let's mark it up. 33.32 down to 33.29.8. Okay? So look up here. Look at the open, high, low, close. This is an up close candle. So look at the close. Look at that C. right here. Can you see the C? Okay, look at that right there. When I highlight that candle, what's the close? 3332.0. Okay. When I highlight this candle right there trades down and into it, right? So open, high, low, close. Look at the L. Okay. What is the low on that? 3332.0. Perfect. Perfection. The very thing that everybody says doesn't exist. I showed it to you yesterday. I showed it to you last week. I'm showing it again to you today. That's right, Scott. To the tick. Not even a tick beyond it. That is a perfect mitigation. There's a small gap right there too. It's a little bit outside of it. But if you include that gap here, there's an imbalance right there. Right? But again, keep listening to the internet. Keep listening to them. Perfection doesn't exist. Doesn't exist for you. Again, self-limiting beliefs. Get rid of them. They do not serve you. Oh, Naruto. Okay, that makes sense then. I get that. And it's the same shit here too. It's the same shit. Maybe not like right here, body-wise, but those little retracements to go lower, right? We get a newer high back into it. And you can see that here as well. Right? Right there. Above it. Into it. Okay, we really don't have much over there either to go higher. Same thing. Same thing. I keep coming on here and showing you the same shit all the time. That level of distribution became what? Accumulation. Original consolidation, low resistance highs, okay? There, okay, little bit of consolidation, that is what? A level of distribution. Distribution on the sell side of the curves become accumulation or reaccumulation on the buy side of the curve. What's that right there? Boom. Reaccumulation. I don't know if Brian is here. Brian, are you in the chat? So Brian shared that he had longed the 50% level with a stop at 25. So that's not the 1 to 3. That's about a 1 to 2. And again, that's only targeting the high, not like say something above it. Maybe like that 50 level that's up here somewhere. I think it's up there, right? Which is a little bit better. But again, I talked about this yesterday saying that you need to know what's enough. And for me, it's the highs, maybe 1 or 2 points or ticks above it. And that's good enough. But either way, a 1 to 2 right there. Right? Now, was that a quote unquote sniper entry? No. It doesn't have to be. It doesn't have to be. A trade only has to not go to your stop loss and go to your TP instead. That's a winning trade. Right? Look how clean that is in the grand scheme, right? Don't be afraid to mark it up, chat. One person had reached out to me yesterday and they were like, hey, John, I heard you talk on the session and you said that if you could find like one person, you know, to go all in for the next 90 days or 6 months or whatever. He was like, I want to be that person. And I said, well, look, journal every day, print off chart. Well, not, I meant every trading day, like Monday through Friday. Print charts every single day, Monday through Friday. Journal Monday through Friday, every single day. Doesn't matter if you took a real trade or a demo trade or you just watched it. I don't care. Okay. As a developing trader, if you have no fucking idea what you're doing, you probably shouldn't be live trading. Okay. You need to learn how the markets operate first. So you understand, okay, well, what's it doing here? What's it doing here? What's it doing here? What's it doing here? At every single stage. And that's a lot of information. But I told him, I said, look, do those things. And I said, I think I told him I would focus on market maker models. I would focus exactly on this. Original consolidation, distribution, manipulation, low risk buys in here. Even though that looks like it would have stopped you out, it wouldn't have if your stop was at the low, right? Mitigation is part of the first leg, back into discount, and I would say the second leg really starts here to go higher, honestly, because like first leg here, and then that run on these lows. Sorry, let me make that a little bit clear. These lows right here, that low and that one get rated here, right? And you know that happens between 50 to 75 roughly. Not every time, but a lot of times it does do that. Couple more retracements before we get the run higher. See that? So that's clean. But when you get to the charts, right? And you're getting ready to place a trade if you're going to, where's price at right now? Based on the time you get to the chart. If you're there early, if you're there late, we'll talk about that too. Whenever you get to the chart, where's price at right now? Where has it been? Where is it going? Simple. Where's it at right now? Where has it been? Where is it going? So in here, okay, and I wasn't in front of the charts at 50%, but I watched the rest of it after Brian posted it. That's why I asked a little bit later, I said, are you still in this? Because I was watching it go higher. Okay. If we were in here, right, where's price right now? Oh, it's right around 50%, but we had high resistant lows and we have low resistant highs, right? We already saw that the mitigation here was respected. So order flow is bullish. Okay. So we go back into a premium, or excuse me, we go from a premium back into a discount, excuse me. So even at 50%, that's like fair value. It's not ideal, but 50% is technically a discount in a bullish market. I know I've said that before. I don't say it often, but if the market is primed to go higher, 50%, even though we do label it as fair value, if it's bullish, 50% will technically be a discount. And you can see that as of now, right? Based on where it's at right now, yeah, this 50%, that was a discount based on the current range. You just don't know that this range exists yet. That's because we're predicting price. We don't react, okay? Twitter reacts, we predict, right? That's why I tweeted at the low of the year. I'll go over that too. All right. But anyway, where are we going? We should go up here. Where are we coming from? I just explained that. So as long as we can manage our risk, okay, we don't want to over leverage. That's how emotions creep in. All right. And then you just simply wait. Sometimes that is the hardest part. It's just waiting. We had an interesting conversation. Well, to a degrey. Brian had talked a little bit, and then AJ as well. I was interested in what they said. If you guys don't mind me sharing, is that all right? I mean, it's a public. There's a few hundred members in here, and you know, it's not really. I mean, it is a private chat, but I want to share it here just a little bit because I feel like you guys had some really good contributions to the community today. So Brian was saying that they used the lazy trader model today. And I think he said it was the first time. Oh, there we go. He said this was the first time holding a trade to the top. And I was going to ask him, like, how does that feel? You know, your very first trade you finally held on to all the way to your TP. And I was going to ask him how that felt. I don't know if he's in the chat. I don't think so. I don't know if AJ's in the chat either, but, you know, he said a few similar things as well. Been practicing patience a lot more. It gives me peace now. And I said, to response to AJ, the first time you hold a trade all the way to liquidity, you go, I think I should do this more often. He said, yeah, before I would be so eager to get out, but now I realize just letting it do its thing and it's paying off. And yeah. Oh, AJ, you did bring up JP Morgan. Yeah, it's up like 111%. No big deal over there, plus dividends. But, you know, it's not always about the big bangers, right? But anyway, so before we move on over to the indices, are you guys good with that today? Are you guys good so far with what we looked at for gold? Beautiful buy model, right? Whether you utilize 25, 50, or 75, all of those. It did, yeah, you would have taken drawdown, but I tell you these things to give you options, okay? Where a lot of traders or a lot of educators will try to, fit you into one thing. Well, you should do this or you should do that, right? That's not the right way to educate, in my opinion. Some people may not like the way you do shit. Sorry, 25 is right there. Right? So the 25 offered a 1 to 3. The 50 offered a 1 to 2. Okay? And then the 75, like with what I did yesterday on ES, that offers a 1 to 1. Now I know 1 to 1s, it ain't the greatest. Okay? It ain't the Michael Jordan of fucking risk reward ratios. Okay? But the probabilities up here are so stacked to go higher. To me, sometimes, not all the time, but sometimes it's worth either the add-on or it's worth its own individual trade. It already ran stops here and run stops here again too. So you know it's not going to go below that low because that liquidity has already been rated. So the probability is that it's going to go higher. Simple. You're just scared to take a 1 to 1 because, oh, that's late. You think it's late. You think it's late. But let me ask you this. You're too scared to take a 1 to 1. Do you have the balls to short though? Oh no, John. No, hell no. I'm not going to short. I wouldn't short just below equal highs. Why not? You scared? What are you scared of? Well, hell yeah, John. I'm absolutely scared because it's going to run to those low resistance highs. Right. So you're too scared to short because you believe the market's going to run the liquidity. But you're also too scared to get in right before the big move? Or right before, not the big move, but right before the spike higher? Make that make sense. It doesn't. Okay, so how's that for logic? All right. So anyway, let's wrap this up. Original consolidation, distribution. I'd say this redistribution, right? Manipulation, low risk long, first leg, second leg, all to go higher. The 3 to 1, okay? You don't have to trade this way, but I just want you to know what's available for you, okay? I'm going to say this and then we're going to go to NQ, or yes, probably both, all right? I don't expect you to do this, but I want you to know what's available, all right? Watch this. Gold today, based on TradingView, is up. Oh, wait, you can't see that because of my trim and my risk disclaimer. Okay, so gold today is up 0.3 or 0.28%. Can we all agree? We can all agree, right? Oh yeah, John. Well, that's the number based on TradingView. It's up, 0.27%. Right. But given leverage and given pyramids, what do you think today offered? Well, John, you're talking about a 1 to 1. It offered, I guess, 1% then. If you risk 1% to make 1%. Sure. But what happens if you take a 1 to 3 and then you take a 1 to 2 and then you take a 1 to 1? Well, if a 1 to 3 risking 1% means you make 3%, great. You make 3% on that. If you risk 1% to make 2, then guess what? You made another 2%. So now we're at 5. And then you took the 1 to 1. So adding another 1% makes what? 6. 6%. 6% was offered. And again, that's only just at the highs. It's not above it. That's just at the highs. That is 6%. On a market, okay? On a market that's not even up 0.5% through leverage and knowing what the fuck you're doing, 6%. And again, that's only risking 1% on each of those. And that's adding to a winning position. You're never adding additional risk to the trade. 6% on a day that moves 0.3%. That's what's available to you. Don't beat yourself up because you didn't get, fuck, John, I've never made 6% a day before. I'm not saying you got to do that. All I'm saying is that that is what is available. So you can take one of them, you can take multiple, you can take all of them. So again, you have options. The opportunities are endless. And to say otherwise is retarded. Okay? To say otherwise is retarded. And no, Fernando, I don't really see that as a Judas. Not really, personally. If you would see this at 9 a.m., would you took some of the 3 setups? I don't know, Jorks. Post in the Discord. Post a chart in the Discord, and I'll look at it after the stream. Fernando, great question. Is there a reason why the original consolidation didn't include the other equal high? Well, it's not equal. Technically, this is a... on the gold futures, at least, that is a lower high, actually. Okay? We'll just get rid of that. If I took this high, okay? Which the alert is done. I don't know why it's like glitching out like that. Oh, great. Thank you. Thank you for giving me the alerts like fucking 2 hours later. Glitching out. Anyway, if I took that and moved it over here, that high was already rated. So that is not low resistant highs. That is. And now it's spamming me with alerts. What the fuck? Weird. But anyway, that's the point. So this technically was on the future side, technically this was a intermediate term high. Because I had a high and then there was a lower high on the left and a lower high on the right. And based on this entire range here, sorry, I wanted to go over to NQ and we're spending quite a bit of time over here. This is another reason why that 75% level might seem too far, or even that 50%. The 50% here, right? You might be like, oh, well, 50% is like, that's a bullshit ass entry. No, your mindset is bullshit. Because on a higher range, that's in a discount. Closer to 25 than it is to 50. So that's why I said don't skip higher time frames. Don't do that. You have large ranges, you have small ranges. The way that I do it when it comes to targets and entries, I'm measuring from my target to the low. And I'm utilizing those levels. It's also good to know where you're at in a higher range, sure. But there you have it. Okay? So that was basically a reversal into internal range liquidity. Between the range, there's resting liquidity there. Anybody who caught shorts going lower, they're going to have stops there. So we find liquidity and trade in that direction. Always. Okay? So there's an acronym, all right? So gentlemen, it would be easy to remember the acronym. Find the liquidity, right? I'm gonna say this one time because I don't want you guys to think I'm immature. But titty, okay? TITD, titty. Trade in that direction. All right? Are we good with that now? Cool. You ain't never gonna forget that shit. Yep, John, that adds up. That adds up. All right. So I tweeted this morning because triple Qs were at all-time highs. And I don't think I have that on the future side. But I did put that here. Right? Look at that. Isn't that what we've been aiming for the last couple of months? Isn't that it? Look at that. Look at that monster, baby. I hate the fact that TradingView throws the tweet on Friday instead of Monday when I tweeted on Sunday. So that's kind of bullshit. But whatever. All-time highs that was met. See that? So to me, okay, I wasn't willing to short. I know the Trade House Telegram, Ricky and them were shorting, took some great trades over there. I just wasn't willing to short personally, but I did sell, you know, I think I sold some triple Qs and some SPY as well that I've been holding. So I was banking this morning at our open, and that's why I tweeted that. All-time highs to take something off as well, because that's what I'm doing. It's not trade advice, but that's what I was saying. But if you look at triple Qs, and you would see the same thing on Nasdaq, like regular trading hours. Monday, right, to yesterday's open, that's a pretty big gap here. We got almost no movement into the gap, and we traded higher instead. And it was we got very close to all-time highs yesterday. I actually said in the Trade House Telegram, I was like, we might actually get all-time highs today for triple Qs. We fall just a little bit short, and then we fade off of that into the close. So then it's like, okay, we should hit all-time highs tomorrow then. But I don't know what overnight's going to do. Because, you know, we got Asia and then we got London. You know, I don't know what to expect. But if anything, I would be bullish, right? So then what actually takes place? And this is the part where things get interesting for today. Here's like roughly midnight. We have a low, we trade higher, we have a higher low, another higher low, a few higher lows here, another higher low, and then another higher low. And then that rally today for the all-time highs on triple Qs. So up in here, this is pretty extended. This is pretty overextended. Okay? There's no indicators. There's no volume. There's no Bollinger Bands. There's no anything. There's no nothing. You just look at it. It's overextended. It's been trading higher and higher and higher and higher. And we left behind all of these higher lows. So that to me could be a target for the downside. I'm going to show you the other tweets too, because I'm about to roast the fuck out of Brandon here in a minute. I know it's not the most professional thing to do, but I don't know. He deserves it. So I'm going to do it. What's good, Brian? Is that the same Brian that was posting about gold earlier today? You missed it. I was talking about you. In a good way. No, that's a good question. Normally I keep the magnet tool on all day anyway. I normally don't take that off. And I don't really know too many keyboard shortcuts. But that is a good question. I don't know all the shortcuts, okay? I'm a little bit old school. Bro, I've been with TradingView since like TradingView almost launched, okay? If you look at my TradingView account, I've had an account for like 8 years or some shit. I was one of the OGs, you know. I was here before they had bar replay, before they had half the shit they have now. And I just, you know, I'm old school, man. I was there before they had the magnet, before they had tweets, before they had half this shit. So I don't know all the shortcuts, but it is a good question. And you don't come off as a smartass. I definitely come off as a smartass. But anyway, the point is we have a lot of liquidity down here. And I don't think we're going to stop at this first one. We have all these lows put together. The lowest one is down here. It doesn't make sense to run just one or two of them. It would make sense to really extend lower, down to at least 370s. So we don't have to do that. This is our gap here this morning. Right? That's what that is. That's what this is right here. Yesterday's close to today's open. That's what this gray box is. So if I was short, let's say multiple contracts, the low end of this gap would absolutely be a partial. And then I would hold a runner for the 370s. I'd say like 375 and I'd be good with that. 75 level below some lows, I would have that as a final and then I would piss off. But we don't have to get down there. But it's looking like we probably could. Nice little head and shoulders up here, right? Right? Nice little intermediate term high. We have a lower high here. We do have one right there. This one's more distinctive, but nice intermediate term high up here. And then shorts all the way lower. Pretty cool. You're from India? Nice. I'm from the US, from Houston. Houston, Texas. All right, Jorks. Well, thank you. Thank you for that. And so with that, ES has some very clean lows as well. I already know because I already looked at it. And actually, that was already met. That's been met. These equal lows down here. 6138.25. I know Ricky's probably going bonkers right now. Just double checking the chat. Yep, I knew it. I knew it. Look at that. Yeah, beautiful downside here. Similar idea, not the same. We had not a lot, but we had overnight movement, and then this morning we were extended above. This is Tuesday at 2:30, so that's previous day PM session high, right? So we 1, 2, 3, right? We basically Judas that bitch. We trade lower. That retracement, honestly, that retracement is a bitch. I know I'm kind of cussing a lot today, but look at that. I mean, he came all the way back up here to make equal highs. Almost takes that one. It doesn't do it. Then it trades lower. There's an inversion right there. That would have been wonderful to short. Well, yeah. This is kind of a... It's kind of a shitty market maker model. It's really more of honestly, if I had to say, it's really more of a what a lot of people on the ICT side they call AMD, accumulation, manipulation, distribution, power 3 for short. And if you remember from a long time, I think it's been at least a year, I shared the PO3 indicator. I didn't make that. Someone else did. And that's what it's called. It's called the higher time frame power of 3. And it shows the daily candle or even like 1 hour candles if you change it. And the whole idea, if you use it from, let's say, midnight open, right? Midnight New York. Okay. Let me see. That's going to be... I think, yeah, right there. So midnight New York is 11 p.m. for me. See that? Oop. You see that? and that coincides with the open, again based on midnight New York. So basically AMD is consolidation, right? Run the highs and then reverse it lower. Accumulation, manipulation, distribution, selling above the daily open, either based on, again, midnight New York, or my personal favorite, which to me is just way better, is equities open. Right? So it's the same idea for everything else. You have London open. This was in the 48 Laws video, bro. You have London open, New York open, you have Asia open, you have midnight New York open, weekly open, monthly open, yearly open. You got opens everywhere. Right? But that's my, if I only had to pick one, it'd be equities every time. Every fucking time, equities. Fernando, yes, that I shared in the Discord a couple of weeks or months ago. I did share the colors and stuff. You don't have to be like me though. This color scheme honestly is not 100% my own anyway. This was years ago. I came across somebody on Twitter, and even back then I tried to give them their flowers, but I don't remember who it was. And they shared a chart that was very similar. No, they didn't have the lines like I do, but they had these type of candlesticks. They had a very gray background with white candlesticks and dark gray candlesticks. And I said, that is sexy. And it, to me, I call it calm, because it is very relaxing. There's no red, there's no green. So you don't get any emotional response from colors, because color, you know, the psychology of colors, that's an old video. That's probably not even on my channel anymore. But as people, not even as traders, but as people, we have been conditioned with colors. Red is bad. You know, the red sports car is supposed to be faster or whatever. You know, school buses are yellow to be cautious. Right? And then at the red light, red means stop, yellow means, for me, it means speed up, but for everybody else, it means slow down. And obviously green means go, right? And the gray, if you will, by eliminating colors and making them black and white, you don't get any sort of conditioning. You don't feel bearish because it's trading lower. You don't feel bullish because it's trading higher. It's just either higher or lower. But seeing a bunch of red, you'd be like, oh, fuck, that's bearish. And then what happens? Everybody gets stops out, right? And then the market trades higher. And you go, well, why the fuck did I think it was bearish? You saw the red. But eliminating colors, very good decision. So my colors are not the same as theirs, but I tried to get it as close as I could. And so this is what it's been since then. But yeah, I've shared that already many times. I'll share it one more time just because we're here and, you know, it's cool. The body, the up close body is white, 90% opacity. And the down close body is that 78 7B 86. And then what do we say it was? 80%. 80% opacity. And then everything else I think is the same. 434651. 434651. And it's at 100% opacity. And the background is that D1, D4, DC. Okay. I have, what is it called? I think the grid line. The first one is 0, because I think that's ooh, that looks fucking nasty. The second one is a gray, but it's just very thin. So it's 9598A1. And the opacity is like 14%. It's very thin. Unlike your mom. All right. So accumulation, manipulation, distribution. Right. Beautiful intermediate term highs up here, especially with the bodies. See that? Yeah, JP. I always sneak those. Sometimes people don't even hear it because they're just busy doing other shit. I throw that in here. Make sure you pay the fuck attention. What's that right there? Boom. Intermediate term high is a high with a lower high on the left and a lower high on the right. What's that right there? High, lower high on the left, lower high on the right. Lower. Real simple. He says, I hear it all the time. What else do we have for today? Oh, yeah. Well, I guess we can get to the tweets now. So I don't want to be mean. I don't. But listen. Oh, man. I don't know if you heard that. That was my elbow. I'm getting old, bro. Too old for this shit. I wanted to share this because I was called naive, bro. Right? So what happens is, yeah, JP, of course. I'm not mean, I'm just right. You know what I mean? Cameron said, be mean. I just came from the guy's Twitter page. I was not going to make fun of him until he tweeted me at 9:10 today. Because that right there is like the epitome of why most people are stupid and why I fade most people. And it works like you would not believe. I mean, I tweeted quite literally the low of the year to the day. It was Sunday. It was Sunday evening I tweeted. And that same Monday, because Sunday and Monday candle, if put together, that's the low of the year. So right around the time that I told you we're going to trade through this gap and then back into it to go higher. So as we're going higher, it was a different page and it was really stupid what they shared. And it's like an overlap. Well, this happened in 2000. This was 2008. This was 2009. It's 2025. This ain't fucking 09, 08 anymore. Interest rates are different. The global economy is different. The fucking debt is different. The dollar is different. Everything is different. Okay? There's almost nothing the same between 08, 09 and 2025. Fundamentally speaking, nothing is the same. Okay? It's different. And that's what I was trying to explain in that thread. I shared it in the Discord if you want to go read it. You might get cancer for fucking reading it because these people were pretty wild, okay? But I'm trying to tell them it's not the same. We're going higher. And so this is what this is how he responded. Patterns in the market and history tend to repeat themselves, right? Or patterns tend to repeat itself. Yeah, the pattern of fading most people. That's what matters. That's the only pattern that will ever matter. What's everybody doing? Do the exact opposite and you will win. It's called being a contrarian. That's the technical term for it. It's called being a contrarian. There's a reason there's a name for it. So he said, patterns in the market and history tend to repeat itself, not like you think they do. This is not 08, 09. So again, to have your perception on this, in my opinion, is a tad naive. Our economy isn't in some great place as you seem to make it right now either. Bro called out the low inadvertently. Right? It didn't take all that much time. We had to trade back into the gap. That's why I told you we would do it. Like a week or two beforehand. I know. Crazy shit, right? higher, retracement, higher. We just came out of this general consolidation the last 2 or 3 days. Now, we don't have all-time highs on, let's say, the Nasdaq September futures, but that's why I shared that on the triple Qs. I said triple Qs is at all-time highs. And so I commented back to them, and I was like, you guys doing okay? You know what I mean? I was like, are you doing all right? Because I got some fucking lube if you need it. You know what I mean? That asshole's probably burning. Okay? I got some Aquaphor. You never know. It hurts to get your face ripped off. Okay? So he tweets back and says, LOL, market's coming down, my friend, in due time. Just watch. Don't let your cockiness get to your head. I might be a little bit cocky, but I called the low of the year to the day. Who wouldn't be? I made $500 yesterday in under an hour. Who fucking wouldn't be cocky? Come on. Who wouldn't be, bro? Is it really being cocky if you told them what was going to happen? No. That was a warning saying, hey, look, man, your logic is a bit flawed. You didn't go to college, did you? I didn't go to college either. But I read a lot. I try to figure shit out. I would say I got a pretty good fucking handle on things. So it's not an ego thing. I don't try to do these things on purpose. I'm going to take these trades and go roast people. I don't try to do that. I don't try to do that. I told you, if this guy wouldn't have tweeted some stupid ass shit, I would have never mentioned it. I'd have never said anything. I would have showed you my tweets. I would have never put his tweets on here. But this is what self-limiting beliefs do. This is what ego will do to you, right? Ego is the enemy, Ryan Holiday. In here, it's not like it used to be. And I'm saying, bro, it's bullish. We rally higher, like a couple thousand points. All-time highs for triple Qs. No, it's going to come down. It's going to come down. Bro is the #1 salmon right now. Bro is the leading salmon swimming against the current right now. Why would you go against that? And that's the problem most people have. This is the problem that people face. Okay? It has to go to the equal highs. No, it doesn't. It doesn't always have to do that. We've seen instances where equal highs get left open. We have seen that before. Because they're not up here, but like, let's say these were. You know, this could be a target for something later on. Probably not today. But if you were in here on a smaller time frame, you might have thought, oh, well, that's 1 minute, low resistance highs, and that's manipulation, and oh shit, I'm stopped out. Oh, wait, now we're going to run for the highs. All right, I'll take a re-entry. Oh, shit, stopped out. All right, bro, you're fighting the train right now. You're fighting the train right now. We are overextended. Okay, look at this, right? Just like NASDAQ, Monday to Tuesday, huge overnight movement. A little bit into the gap, we continued, right? And then again today, we gapped higher and then traded above yesterday's high. You're trying to long above yesterday's high? Why? Long above the high. There are instances where you can long above old highs, but in majority of cases, that's why it's a rule, because of this. All right. So listen, sometimes you're going to stand in your own way. And this is exactly why I came out years ago to talk about the successful traders trio. Psychology is a huge aspect of it. That's one of the 3 legs. Psychology. You could have good trade management. You could have a good strategy. But if you don't have the psychological skills, if you don't have the patience to wait for setups, if you don't have the patience to hold trades, you know, for TP, if you don't have the right mindset because you want to revenge trade and, you know, fight what the market is doing, you're going to burn yourself. Okay? And then you'll really need some Aquaphor, some lotion. You'll be cooked. But yeah, welcome, Anton, our newest SMS member. Welcome. Drop some celebration emojis. It's Anton's birthday today. His SMS birthday, at least. Welcome, welcome, welcome. But that's pretty much the end of the stream, man. Triple Qs to all-time highs. Gave it to you. Big ass fucking swings. Not just the day trades. Day trades are cool, don't get me wrong. I can do that too. But I'm not limited to one asset, not limited to one time frame. And I'm sure as fuck not limited to one concept. And neither should you. That's why I teach the things that I teach. All right. So hopefully you got some value today. I know sometimes I can be, you know, a little bit arrogant, a little bit non-stoic. I know. I'm not perfect. But if you're going to go out of your way to try and prove whatever it is that you're trying to prove, I'm going to burn your ass, bro. You're fighting the trend. Don't do that. So, y'all be good. Be blessed, man. We'll be here same time, same place on Friday the 27th. All right. I'll put out the market review tomorrow on Thursday in the evening. If you guys have any questions, drop them in the Discord. Yeah. Don't be a salmon. We'll see you Friday. And yeah, I agree, Willow. I definitely agree.